typically these loans are for people who don't have as good a credit and may have some debt challenges. Hey everybody, welcome to another edition of Info on the Go, where we make understanding real estate clear, calm, and concise. I'm your host, Dietrich Williams. Today I'm going to answer the question, what is the minimum credit score requirement that I can have in order to qualify for a mortgage? Now, that question is a little bit tricky to answer because I'm going to tell you, it really just depends. And it depends on two things. One, the type of loan that you're going for, and two, it depends on the lender. So let's discuss the four basic types of loans that are out there, and we'll talk about what those minimum credit requirements are. So first up is the conventional loan. Now, these are loans that are typically for people who have stellar credit and very little debt. Now, because they're not government backed, they're backed by private institutions, these loans are a little bit more difficult for some people to get into. The minimum credit requirement is usually about 620. But with COVID, they have been raising those scores up. In some cases 640, in other cases as high as 680. Now, keep in mind with these loans, if you put down less than 20%, you will have what's called private mortgage insurance. And we discussed that in a previous video. You can catch that right here. Now, that PMI is based on your loan to value, amongst other things. And what's your loan to value? Well, it's the amount of money that you borrow divided by the appraised value of the property. So if the property that you're buying is $500,000 and you're putting down $50,000, that's 10%. So your loan to value would be 90-10. Now, with these type of loans, once your loan to value drops 80 or below or lower, then that private mortgage insurance should automatically drop off. The next loan we're going to talk about is FHA loans. Now, these loans are government backed, and for good reason, because typically these loans are for people who don't have as good a credit and may have some debt challenges. But why should that disqualify them from accomplishing the American dream of home ownership? So the government has instituted these programs to help those borrowers who otherwise wouldn't be able to afford a home to be able to afford a home. Now, keep in mind with FHA loans, that mortgage insurance, you're going to have that for the life of the loan. No matter how much money you put down, you're going to have that until you either sell the house or refinance. But the credit requirements are a lot lower. So for these loans, typically it's a credit score of 620. But again, keep in mind, there's risk with COVID that's happening right now. So some borrowers or some lenders are raising those scores up to 640. Some cases may even be 660, depending on the lender that you go to. Now, what you want to keep in mind is that because these are government-backed loans, there's a little bit more risk there because you're putting less money down. You may pay interest rates that are a little bit higher based on how much money you're going to put down and your credit score. The next loan type we're going to talk about are VA loans. Now, these loans are government backed as well, and these are what I call the thank you for your service loans. So the government has instituted these loans for people who have served in the branches of military as a way of saying thank you for serving our country. Now, with these loans, the minimum credit requirement is typically about 580, but in some cases they have gone as low as 500. So these are great loans for veterans to take advantage of because, one, you're not going to have a down payment, you're not going to have PMI, and the interest rates tend to be a lot lower. And then last but not least, and least but not last, we're going to talk about USDA home loans. Now, the reason I put these last is because in Southern California, we don't tend to see a lot of these. And the reason is because these are loans designed for people to purchase homes in rural areas. And if you know anything about LA Metro, it is not a rural area. So these loans typically follow the FHA guidelines in terms of minimum credit score requirements, typically about 580. But again, with COVID, there's still that risk there. So for a lot of these lenders, they've been raising the minimum credit score requirements to lessen the blow of somebody defaulting because of the risk of COVID. Now, with these loans, you're going to have mortgage insurance, but it will be a lot lower, and you typically will still get favorable interest rates. So keep in mind that, again, the less money you put down, the greater risk you are, you're probably going to pay a higher interest rate. So there it is, the four different types of loans that are out there and the credit score requirements for each of those loans. Now, you want to talk to a lender because it's going to vary from lender to lender. And again, there's different types of loan programs that are out there, like USDA. all different types of programs. The credit scores are going to range, but you want to shop around to see what you're going to get in terms of the best terms and the best rates specifically for your situation. Now, when you do shop around, make sure you do it within a 2 or 3 week window. I think 15 days is the maximum, because every time a lender pulls your credit, that's a ding on your credit score. But when the credit bureau see that you've applied for mortgages over, a 2-week span, they're going to count those inquiries instead of multiple times. They're going to count it as one time. That's just my little secret from me to you. Make sure you use that. Now, I hope you found this information useful. Please make sure you subscribe to the channel and ring that bell so you're notified when I upload future editions of Info on the Go to YouTube. And please, if you've got any of these loans or different types of loans here in Southern California, drop me a comment below. I'd love to hear about your experience so that I could share that with some of my current clients and future clients. I want to thank you guys again for watching. And as always, I will see you next time.